Welcome to today's What Moved the Market show. I'm your host Prem. It's Monday, January 5th, 2026, and here is everything you need to know as the markets close for today. The Indian market started the week with a volatile session, witnessing a classic game of two halves. After a bullish morning, where the Nifty 50 hit a fresh record high of 26,373, profit booking kicked in sharply during the afternoon, dragging the indices into negative territory. The Nifty 50 ended the day at 26,250, down by roughly 0.3%. The Sensex shed 322 points to close at 85,440, a decline of 0.38%. The Bank Nifty was the biggest drag, falling 0.79% to settle at 56,085. The broader sentiment turned cautious in the second half, with volatility inching up. On the currency front, the Indian Rupee weakened slightly to close at 90.25 against the US dollar, largely weighed down by rising crude prices and geopolitical headlines. In terms of specific stock movements, the bears took control of some high-flying names today. Premier Energies was the top loser, cracking nearly 7% to close at 787.75. Waaree Energies also faced heavy selling pressure, ending down 5.3% at 2,714.30. Heavyweight HDFC Bank was a key contributor to the afternoon fall, dropping 2.41% to 977.50. This decline came after reports surfaced regarding concerns over its rising loan-to-deposit ratio, which touched 99% in the third quarter update, spooking investors despite decent loan growth. IT major Infosys also slipped over 2%. On the flip side, the consumer durables and realty sectors provided some relief. Voltas was the top gainer, up 3.26% to 1,476.80, driven by strong channel checks. Solar industries and real estate developer Lodha also saw healthy gains of over 3% each, bucking the weak trend. There were no new IPO listings today. Technically, the Nifty 50 tested a major resistance zone at 26,400 in the morning, but failed to sustain it. The index broke its immediate support at 26,300 in the afternoon sell-off. For traders, the failure to hold the record high suggests a potential false breakout. Bank Nifty also breached the 56,500 support level, indicating weakness in the financial pocket. Sector-wise, it was a mixed bag. Real estate and consumer durables were the clear leaders today, showing resilience against the broader market sell-off. The banking and IT sectors were the weakest, with HDFC Bank and Infosys leading the drag. The energy space also saw profit booking, particularly in new-age power stocks like Waaree and Premier Energies. On the regulatory front, there is buzzing news that SEBI might hit pause on the proposed harsher penalties for options trading violations, specifically regarding the order-to-trade ratio. This potential delay is being seen as a relief for high-frequency traders and could support liquidity in the derivative segment, though an official circular is still awaited. In macroeconomic updates, the rising geopolitical temperature is back on the radar for falling to commodities. The bullion market is on fire today. Gold and silver prices on the MCX surged to new highs following news of escalating tensions between the US and Venezuela after the reported capture of the Venezuelan president. MCX gold prices jumped over 1.4% to trade around 1,37,680 rupees per 10 grams. Silver was even stronger, rallying nearly 3% to trade above 2,43,000 rupees per kilogram. Crude oil prices also remained firm, adding pressure to equity sentiment. Geopolitically, the sudden escalation in the US-Venezuela conflict has triggered a risk-off sentiment globally, driving capital into safe haven assets like gold and the dollar, which explains the pressure on emerging market equities like India today. Looking ahead to tomorrow, the technical outlook for the Nifty 50 suggests caution. The index has immediate support near 26,200. A break below this could open the doors for 26,000. Resistance is now firmly established at 26,400. For Bank Nifty, the 56,000 mark is a crucial psychological support to watch. If global cues remain weak overnight due to the geopolitical situation, we could see a gap down opening. Your actionable takeaway for tomorrow is to be cautious with banking stocks until the HDFC Bank volatility settles. Instead, keep an eye on defensive plays like gold-related instruments or stocks in the commodity sector that benefit from rising prices. Stay tuned for tomorrow morning's wrap and send in your questions.